Zero.
Hi, I'm Jason Zamorano with Keller Williams Realty here in beautiful Redlands, California. I help people buy, sell, and invest in their dreams. And today I'm interviewing Mike Wolf, who is a legendary investor. He's actually been able to become financially free from his investments, and I'm just here asking him a few questions for you guys. So, hey, Mike, how's it going?
Hey, it's going great. Thanks so much for having me. And I like that. Legendary. I like that. That makes me feel really important. So that's good.
The legendary Mike Wolf is in effect.
I
All
love
right.
it.
So are you ready for these questions, Mike?
Bring it on. I'm ready for the interrogation. I got this bright light on me, so I'm ready.
All right, excellent. So, we're just kind of curious, myself and the viewers, I'm sure. How did you get started investing?
Well, I got started by mistake. I'd like to be able to say that, back 24 years ago when I did start, I had this plan to become legendary, but it actually all kind of came by mistake. I was a realtor back in the day, so I know exactly what you go through as a realtor. Been there, done that. And I just started off helping people buy their principal residences like so many realtors do. And over time, I wouldn't say I got sick of it. I still enjoyed it. But you're dealing with a lot of emotion. People put a lot of emotion when they're buying their principal residence. And over time, I started to attract some investors here and there. And when I worked with these investors, I noticed that they didn't care, about the color of the paint and the color of the carpets. It was all about the numbers, and that really resonated with me. And so I saw what they were doing. I had a knack for finding them great deals, and I saw what these investors were making, and I saw what I was making in commissions, and I wasn't complaining. It was all right money that I was making, but they were making a whole lot more than me. And so over time, I started to emulate what they were doing, learn from what I saw them doing, and in addition, since I had the knack for finding these good deals, as I started to get enough money to do it myself, I started to buy these properties instead of handing them on a silver platter to the investors. And so that's pretty much how I got started in a nutshell. It's a much longer story than that, but I won't bore your viewers. I could talk for 8 hours on how I got into it, but that was basically the gist of it. Is I just saw what the investors were doing, emulated, and then just kept, I'm a big fan of, even to this day, of education and learning more and more strategy. And,
Right.
So I got into this by mistake. My very first property, I live in Calgary, Canada. That's where I got my very first property 24 years ago. And had I not bought that property, I would not be legendary like I am today. I don't know what I'd be doing. I'd probably be doing some 9-to-5 job. So I'm glad I bought it.
Yeah, you wouldn't be legendary, you wouldn't be financially free, and more than likely you'd still be, hitting the 9 to 5, right?
Yeah, I mean, who knows? You never know what would have happened, but I'm just thankful I pulled the trigger because, I remember I wanted to buy this property. I'd done my due diligence on it, and then, you have that inner voice that starts to tell you, oh, maybe I forgot to do this, maybe I forgot to do that, and you start to second guess yourself. And
Right.
so I almost talked myself out, but I did it, and, I always tell my students that real estate isn't, it's not a get-rich-quick scheme. It is a building game for sure, and I'm glad that was my foundation. I'm glad I started and pulled the trigger, and it led to, obviously a lot more deals after that. So I'm very thankful I did it.
Well, that's awesome to hear, especially for a young real estate agent slash investor as myself, getting started off my feet. Why are you so passionate about real estate and investing?
Well, here's the cool thing is a lot of people ask me that, and the funny thing is real estate. I mean, homes are just made out of drywall. It's bricks and mortar. It's not really that exciting in and of itself. But the
Mhm.
thing that's really cool is one, every time a house goes for sale, there's always a reason behind it. Nobody just wakes up and says, "Oh, I'll put my house for sale today." There's always people are either moving up, they're moving down, divorce, death, whatever. There's always a story behind it. And so I don't even like the term investor. I like the term problem solver. The more problems that we can fix and the more people we can help, the more money we make. So we really get paid to solve other people's problems. And that's what I love about it is that I've been able to do thousands of transactions between myself and my teams over the past 24 years, and I know that I've made a big impact and difference in a lot of people's lives doing that. And so that's number one. Number two is there's no other investment that's as lucrative and safe. Once you know what you're doing, it's a very safe investment, and you have other people. When we create revenue properties, we have other people paying for our investment. It's very highly leveraged. There's a lot of tax benefits to it. And as I mentioned earlier, I'm really big on getting educated. And so I like to learn as much as I can. And I love to take that knowledge and pass it on to my students and teach them so that they can skip the roller coaster ride that I did to get where I'm at and have a much, straighter path to the top and to success. But that's what makes real estate so exciting, is that you do get to help people, and most of all, you get to create a life of freedom for yourself if you do it right. And if you put the right teams and the right people in place, you can really have a lifestyle of freedom, and that's what I preach.
Right. Now, there's definitely endless opportunity out there for everyone who's watching, as well as myself, and you've helped me realize that. Now, why invest in Texas versus California? I mean, I'm from Texas. We're going to have a lot of viewers here from, actually, I'm from California. I'm sorry.
You don't even know where you live anymore.
Yeah, I just got, it's been a long day, Mike. Anyhow, I'm from California, actually, and I'm sure there's a lot of viewers today that are going to be from California as well. So, why invest in Texas versus California?
Well, there's several reasons for that. When I pick a market, and I've worked all over Canada and all over the U.S., and the first thing I look at when I pick a market, first of all, is that market landlord friendly? And what I mean by that is, if I get a bad tenant in my property, how long is it going to take me to get rid of that person who's maybe not paying rent, maybe they're trashing my property? That's going to affect my bottom line. That's number one. So if the government is really in favor of the tenant, then I don't want to deal in that state. And California happens to be one of the worst places in that regard, in that you could get a bad tenant in your property, totally trashing your place, not paying you a dime, and they can stay there upwards of a year if they know how to work the system. In Texas, I can typically get rid of a bad tenant within a month, month and a half, 2 months at the worst. And so it has a much lower effect on my bottom line. That's number one. Number two is the prices. I mean, in California in general, especially where you live in Southern California, the numbers are ridiculous. And number three is not just the price. I don't really care. I'm not necessarily looking for inexpensive homes, but I want to get a good bang for my buck. I want to get a lot of rent relative to the amount that I have to take out of my pocket to buy that property. And at one of the auctions that I go to in one of my favorite markets in Texas is at the Houston. There's an auction that takes place there. We'll talk a little bit more about that. But I can get properties, for $10,000, $15,000, $20,000 that are going to rent for $900 or $1,000 a month. It doesn't take me very long to recoup the money that I take out of my pocket. So even if all I had was, let's say, $15,000 in my pocket, if it gives me $900 a month, before I know it, I've got another $15,000 where I can go back to the auction and get a second property and keep expanding. In California, that's not even going to get you a shed. That's not even a down payment. So there's a lot of other factors. But the other truth of the matter is, California is having a lot of problems financially. Texas is the opposite. It's doing very well. So there's just a lot of different pluses, and I'm sure you know this, but California also has a horrible taxation system. So a lot of high net worth people are leaving California and moving to places such as Texas and Florida and other places where they can reduce their tax liability, and that does not help a market. So I'm looking for places that are going to grow, appreciate, and we're going to get the best bang for my buck. So it's all about ROI, and ROI is affected by all those items I mentioned earlier.
Okay. So obviously you're looking at the population growth, you're looking at things like taxes, also bigger returns and less financial risk on your end as a problem solver / investor, right?
Absolutely, and but it's not all about price. I mean, I can go get $10,000 homes in Detroit as well. I don't want to buy them there because that economy is in really big trouble, and it's a one-industry town. When I look at a place like Houston, they're building the world headquarters for Exxon, and that's employing thousands, if not tens of thousands of people, in addition to a whole diverse economy. And so, we look at a bunch of different things. We look at a lot of different things in the demographics. Are people moving there? Are they moving away? There's a lot of things we ask ourselves before we get into a market. And as you know, I'm not doing, if I was just buying one property here, one property there, that's one thing. But if you want to make your business scalable and get yourself a lot of properties, which eventually gives you that freedom, it's really important that you do a lot of homework before you jump into a market and start building teams. So that's really one of the key points that I'd recommend for the viewers is do your homework, or better yet, find somebody who's already done the homework for you. I give my students a lot of information so they don't have to go through all those steps.
Right, right. And that is one of the benefits. You've already been successful at doing this. You've done your homework, and you can help small-time investors get to that next level. Now,
well, that's what I mean. When I first started out, I didn't really know how to be an investor properly, so I emulated people that I saw being successful at it, and were doing the things that I wanted to be doing. And that's really the message. Find people that are smarter than you, doing the things you want to do, and emulate and collaborate. That's and learn from them.
Sure, sure. And so, what exactly are tax deeds?
Well, when I mentioned earlier that we become problem solvers, one of the problems that counties have all across the United States is they need money, obviously, to fund the roads and keep the schools open, their fire and police departments open. And that money typically, that comes from property taxes. So when somebody doesn't pay their property taxes, eventually the county has to have a way to recoup that money. And what they do is they create what's called a tax deed. So they're basically, after a number of years, it's not like the person's one day late on their property taxes, but if they're 2, 3, 4 years late, and they're making no attempt to get caught up, the county will eventually put their homes up for auction. And so we see these properties with opening bids of whatever the back taxes were. So in the case of Houston, which is my favorite market across the U.S. for a number of reasons, which I'll get into a little later, we see properties, we see single-family homes start with opening bids of $5,000, $6,000. They'll usually get bid up, sometimes as low as 10 or 11 or 12,000. Sometimes it's 15, sometimes it's 20, and the fancy, pretty homes will sometimes get bid up over 100,000. But the bottom line is we can get these properties for pennies on the dollar, and at the same time we're creating win-wins, because one, the county would have to shut down their schools and shut down their fire and police departments if they didn't have this revenue coming in. These homeowners, you got to remember that they've been delinquent for years, and they've, if they haven't made their car payment, their car's already been repossessed. If they haven't made their credit card payment, that credit card's been cut off. But they've been allowed to stay in their home for a lot longer than they normally would be able to, because the county knows that eventually, ultimately, an investor is going to come bail them out. So we're creating a win-win, and even after we buy these properties, we can sometimes help the previous homeowner to get back into home ownership. And so once again, it gives us an opportunity to solve a whole bunch of people's problems, and at the same time make ourselves a pretty decent return. So tax deeds are really a remedy that the county will use to get this revenue, and creates a really fantastic opportunity for investors like myself, and hopefully some of your viewers will get interested in that, because it is one of the best ways to get started. Even if you don't have a lot of money or even no money, there's ways to do it with no money, and that's some of the stuff that I teach.
Right, and I think that's what's so exciting and so unique as well, is that you're teaching these strategies to start from low capital and actually build your way up. Now, you also teach how to purchase properties at the auction, correct?
Absolutely. I run a 4-day course in Houston where we actually learn all the steps, because when we buy these auctions, the deals are phenomenal. But there's also a lot of pitfalls, and you can't just show up at the auction and not having done your due diligence. There's a whole lot of steps. So I basically give my students a blueprint on how to do it properly. The other really cool thing that I've created is I'm a very busy investor. I've got a lot of things going on in a lot of different cities and in 2 different countries, for that matter. And so I like to build teams. And so, for instance, in Houston, I've got realtors, I've got property managers, I've got my rehab crews that fix up the properties, and then I've also got what I call my bid by proxy team. And these guys will do the stuff for you that normally you would have to do on your own. So, for instance, I've got people that will drive around and videotape the properties for you to make sure, one, that they're still in existence, because sometimes they get bulldozed and we don't know that, and that would be a really big mistake. We'll talk about mistakes later. they basically do a lot of your due diligence for you. Then I've got other people that will actually go to the auction for you. So what this allows is that you can actually bid at the auction from anywhere in the world without having to fly to Texas every month. So I've had clients from as far away as Australia take my course. I teach them how to do it properly, and then they delegate and use a team, and the team does all the work for them. And so what I've done is I teach my students how to do real estate, how I do real estate, which is a lot of is delegation. You can't scale your business to the point where I have if you're trying to do it all yourself. It's definitely not a solo sport. This is a team sport, and I've created the infrastructure so that people can do this from anywhere in the world.
So you've already got people on the ground as foot soldiers doing the work for you, and you never want to get emotionally tied into any of your properties, correct?
That's one of the biggest mistakes I see investors make is when you let it, and this is for any business. I'm a serial entrepreneur. Besides the real estate, I've owned a lot of other businesses, and one of the things that has made me successful is I treat all my businesses, whether it's my real estate or I used to own a pub and a tomato sauce company. I have a very diverse background, but I don't have any emotion in any of these businesses. I didn't buy the pub because I thought, oh, it's really cool to say you own a pub. I bought it because I saw an opportunity. It was a failing business that somebody had started. They had a lot of emotion in this business, and they unfortunately ran it into the ground. And this was at one point their dream. I guarantee you'll never own another pub again as long as they live. If you go in with business sense and you bring the right people in that are best at the job, and so when it comes to real estate, I've got people that are way smarter than me at what they do. The person who goes to the auction for me is way better at bidding at an auction than I am. Because guess what? I may have learned how to do it once, and maybe I've done it once or twice, but this person who goes there month after month after month, eventually they surpass you. And so it's all about getting the right people on your team, treating everything as a business, and doing what's going to give you the best return. And so a good example at this auction is people will often fight over the prettiest properties. I like to bid on the stuff that isn't that pretty, but to me the prettiest property is the one that has the most digits on the paycheck. That really makes the property prettiest. It's not the colors. It's not about how big the home is. It's all about buying the properties that are going to give you the best return. And quite often the ones that aren't that pretty have a lot less action on them. So I could go on and on about how you need to turn this into a business and keep emotion away from it. And one of the best ways to keep emotion away from it is to have other people that to them it's just mundane. They go to the auction every single month. It's just another property to them. When you go there, it's like, oh, I want that one because it looks really nice. That's a big mistake. So any business you get into, treat it like a business.
So you're not looking for travertine walls, tiled walls, right?
Not at all, unless I'm getting it for a good enough deal that that is going to put the numbers in my pocket that I need to make it worth my while to do the work. But I can go buy the properties that are a lot cheaper, a lot uglier, and create value for somebody else on these properties and make a bigger paycheck than the ones that I'm investing a whole lot more money to get into. And you got to remember, we're not always just competing against investors. With the pretty homes, often we're competing against people that want to live in that property, and those people are going to pay top dollar. Sometimes they'll pay more than the retail price. You go on the MLS and buy it for cheaper because people, when they go to an auction, they have this competitive spirit where I want to win. They want to win, and to me, winning isn't getting a property. To me, winning is getting a good property at a good price. Sometimes the best deal you do is the one you don't do.
So I guess we'll stay away from the Taj Mahal then. Now, you mentioned competing with the bigger banks in the auctions and things like that. I mean, how can small-time investors actually compete with the big banks and some of the hedge funds at some of these auctions in Houston, for instance?
Well, here's one of the cool things about Houston is that it's in Texas. It's a little bit more complicated. They have a few different rules than the other states that are deed states have in place. So, for instance, one of the things a lot of people don't know is that, okay, if you're the high bidder at the auction, you own that property, and by the way, you own it free and clear. If there's a mortgage on there, that mortgage disappears. All the liens disappear. And that's one of our due diligence steps is to make sure, because there are exceptions to that, and our job is to make sure that we aren't buying one of those exceptions. But if we do our homework right, we're buying a property free and clear, no mortgages, they get wiped out, no other liens, they all get wiped out, including the IRS, by the way, they get wiped out too. And our goal is to get these these properties with the best returns. But one of the things they do in Texas is, even though you have full ownership the day that you're the high bidder, they have what's called a redeemable deed. And what this means is that the previous homeowner has 6 months where they can come back and buy that property off of you. Now, in order for them to do that, they've got to give you a 25% premium. So what that means is, when you're the high bidder at the auction, one of two things is going to happen. One is you're going to get at that home free and clear. If you follow my steps, you're going to get it for pennies on the dollar, and you're going to save a whole lot of money on that property. The other thing that could happen is that homeowner is going to come back, and let's say you paid $20,000 to buy that property. Well, they have to give you $25,000 to buy it back. In addition to that, anything that you do to the property, there's certain exceptions, once again, and I teach this in my course, but if you had to put on a new roof, and let's say that cost you $10,000, previous owner has to give you $12,500, a 25% markup. So everything you do, you're going to make 25% on in 6 months. Imagine you can make 25% on your money every 6 months. It's phenomenal how quickly your money will grow. To make a long story short, the reason I'm telling you all this is because it's a little bit more complicated. In most other states, you would just go buy the property, the homeowner can't come back, and you own the property free and clear. Banks, hedge funds, all the big players, they don't want to do these extra due diligence steps that I teach my students how to do. So they would rather go where it's really easy, where they just either they're just going to get the property, there's no other things that can happen. They just want easy. They want to push that easy button. And the reason they want to push the easy button is these guys get paid. They're using other people's money. And a lot of these people are on salary. They get paid the same amount. So they don't want to do complicated stuff. They want to do easy stuff. And to them, they don't mess with tech. They don't go to Texas for the most part. We see very little competition from the big boys at this auction, which is why I love it, because that's one of the other things you have to look at. You might find a place that's got the best returns, but if you're up against people with billions of dollars of other people's money and you have zero chance of getting a property, there's no point you being there. So that's one of the other things that we look at, is what is the competition. In this case, it's not that fierce, which is why I love it.
So you basically just explained further ways that investors can monetize their investments by not only purchasing the tax deeds, but then also making additions to the home that then can be, profited from, right?
Yeah, well, this is some of the stuff that I teach, is how to maximize your returns. There's different ways to play with that, and I've got different types of investors. I've got some people that come to me, and they have very little money, and for them, I usually recommend, let's get a couple of properties. We'll find ones that are very unlikely to get redeemed, because making the 25% is great. But if I can buy a property for 20 cents on the dollar, if I can get that property for $15,000 and sell it for $80,000, if I don't have a lot of money, that's a good way to raise some capital and get yourself in on the game. Do that a couple of times and then buy a property to hold. I'm a really big fan of buying to hold, because when you have a portfolio filled with properties that are putting money in your pocket every single month, now you've got freedom, because you got money coming in before you wake up. And you don't have to go to work anymore if you don't want. The money comes in whether you're on the beach, whether you're giving back. It doesn't matter what you're doing, that money is always coming in. So I'm a really big fan of building this portfolio. But some people aren't in a position to start off doing that. So I like to help them with that. But then I get other people who have deeper pockets. They've got some more money. And so I recommend, hey, let's get some of these ones that are likely to redeem, get some 25% coming in every 25% every 6 months. And then we'll do a few and turn them into long-term rentals. We can play a much bigger game. So it really depends. All my investors and students come from different walks of life, different amounts of money. And so what I do is I like to sit down with them and strategize and figure out the best way to give them the best returns and get them from A to B as quickly as possible.
Well, that's awesome. So you actually have different strategies for different levels as far as people and their investments in life. What action can you advise the viewers to begin taking today to make sure that they become financially free and ultimately fulfill their purpose in life?
Well, I think the most important thing, and I think you hit it on the head, it's not just all about money. I'm a really big fan. Every business that I've owned and will continue to own, it has to fit in with my lifestyle. I get offers across my desk every single day, and a lot of stuff that could potentially make me a lot of money. But then I look at the headache factor and the stress factor, and that's not really congruent with the lifestyle that I want to lead. And so I recommend to your viewers that always think about, what's going to get you to where you want to be? What's going to give you that freedom? And whatever that freedom looks like to you, it might not be my lifestyle. Whatever it is that makes you happy and lights you up, But to me, the easiest way for most people to get there is real estate. One, because it's very lucrative. Two, is it can be very highly leveraged, both in terms of time, using other people's time, like my team's, using other people's money. Let me give you an example. I have a student who took my course, and basically she works at a dentist's office. And so I told her, go talk to the dentist that you work at, and see if they want to invest with you, because dentists don't typically want to shut down their practice, learn how to do a strategy, fly to Texas every month, build a team. There's a lot of moving parts to this if you don't know what you're doing. And to somebody who's a busy professional, they don't want to do that. There's a lot of people with money that don't have a clue how to invest it. If you become educated and you know how to help these people, and once again create a win-win, and that's what real estate's all about, is always win-win. If you can help them to invest their money, you have the strategy. Now you take what's a lose-lose. You have somebody who's got money in their bank, doesn't know what to do with it. You've got a strategy, but you have no money, and now you collaborate. Now you've turned a lose-lose into a win-win. So to me, one, get yourself educated or team up with somebody who's already got the education. Start building definitely passive income. Don't just, to me, you can build income in a lot of different ways. A lot of people create what I call recurring revenue, where the money, you could buy rental properties where the money comes in every single month, but if you're the one collecting it, you've created yourself a really horrible job. Property management, to me, is one of the worst jobs on this planet. To me, it'd be like buying a McDonald's franchise, thinking it's going to give you financial freedom and you're going to be able to travel and do all the things you love, and then you're the guy going and flipping burgers every day. So really make sure your business is congruent with where you want to get to. Make sure you have the right people on your team. And if you have the right education and mindset, the rest of it will fall into place, even if you don't have a lot of money. And this is some of the stuff that I not only teach, I preach it, because that's what I do with my life. I only do things that I love. When I look at my to-do list every day, everything on there is something that I want to do. I don't put stuff on there. I don't do paperwork. I'm not a big fan of it. I don't know how to work a hammer. I don't know how to paint, so I've got people that do that. And a long time ago, I used to think I was saving myself money by collecting my own rent. I will never do that again, and I don't recommend to your viewers that you do it. So create something that's congruent with your lifestyle. Don't just focus on the money. Focus on getting that money stress-free, where it shows up in your bank every month without you having to do the work to get it.
Yeah, I don't know how many times I've run into investors who actually want to purchase near their personal residence, or they want to get their hands dirty, they want to paint, they want to save cash. In the long run, they're actually just creating jobs for themselves, and they're kind of limiting themselves. Now, as far as actually getting in contact with you and possibly booking a half-hour free strategy session, how would our viewers today actually get in contact with you? Number one, I see the number there and the email and the website as well. But what action can they take to get in contact with you and find out more information?
Yeah, well, they can either phone me toll-free at the number on the screen, which is 1-888-265-0662. That's 1-888-265-0662. Or they can email me at MikeWolf1, MikeWolf, the digit 1, at Shaw, SHAW.ca, which is for Canada. So it's not .com, it's .ca. And I'd be happy to give them a half-hour strategy session. And like I said, it's not one size fits all, which is why I like to give people individual attention, because I get people, like I said, from all different walks of life, and they all have different goals, and they don't all get from A to B in the same way, because they're all looking for different things. And tax deeds are great for some people, and there's other strategies that might be better suited for some of your viewers, depending on where they are in their life and what they're trying to achieve.
Well, awesome. That's powerful information, Mike. Again, the legendary Mike Wolf. Thank you for this interview, sir. It was great learning from you, and we'll touch base another time and talk some more.
Yeah, well, thanks so much for having me, Jason. I appreciate the opportunity.
Hey, thank you. Bye-bye.
Take care.